Welcome back to the channel, everyone. If you've looked at your portfolio today, you already know it's a sea of red. We are seeing some of the most intense market volatility of the year so far. I'm bringing you a comprehensive breakdown of everything that has gone down over the last 24 hours. From escalating geopolitical conflicts and oil surging past $100 a barrel, to an absolute bloodbath in the Indian markets and a crucial super week for the US. We have a lot of ground to cover. I've used my AI assistant, Gemini, to crunch the data and pull together the exact facts you need to know today. Let's dive right in. Let's start with the US market. Wall Street closed the previous trading week on the back foot and is currently staring down the barrel of massive macroeconomic uncertainty. On Friday, the major indices felt the weight of oil-driven inflation fears. The Dow fell 0.3%, the S&P 500 dropped 0.6%, and the Nasdaq shed 0.9%. What's driving the US sentiment right now? It all comes down to inflation fears and slowing growth. We got a brutal revision for US GDP, which grew at just 0.7% in Q4 2025. Consumers are feeling the pinch too. The University of Michigan Consumer Sentiment Index just dropped to 55.5 in March 2026, hitting a 3-month low. But the real story is what's happening this week. We are entering a central bank super week. All eyes are locked on the Federal Reserve's rate decision this Wednesday. With oil prices spiking, the market is terrified that the Fed will be forced into a higher-for-longer stance to combat a secondary wave of inflation. Meanwhile, for the tech bulls, Nvidia's GTC AI conference kicks off this week. The AI narrative is currently in a tug-of-war with macroeconomic reality. Moving over to the Indian market. And guys, this is where the pain is really being felt today. The geopolitical shockwaves have hit Dalal Street hard. After a brutal Friday session where the Sensex tanked 1,471 points and the Nifty fell 488 points, Monday morning brought extreme, heart-stopping volatility. Nifty 50 dragged below the psychological 23,000 mark intraday, hitting a low of 22,955, an 11-month low, before hovering around 23,160. The market breadth is incredibly weak. At one point today, nearly 700 stocks hit fresh 52-week lows, including heavyweights like TCS, ICICI Bank, and Trent. Foreign institutional investors are dumping Indian equities. On Friday alone, FIIs sold a staggering 10,716 crore, the biggest outflow since October 2025. The Indian rupee has weakened severely to 92 rupees 45 cents against the dollar. Meanwhile, gold futures are trading at a massive 1,058,400 rupees. Indigo Airlines announced fuel surcharges and slashed their Middle East flight schedule from 150 daily flights down to just 36. As oil and commodities surge, material stocks like Ultratech Cement and JSW Steel provided a rare bright spot today. Finally, we look at the global market. The catalyst for all of this panic is the escalating conflict in the Middle East. The Strait of Hormuz, a massive artery for global oil, is effectively closed. US strikes have hit Karg Island as the war with Iran continues. As a direct result, Brent crude has surged past the $100 mark, trading at $104.78 per barrel. EU inflation warnings are already being issued. US President Donald Trump demanded that other nations contribute to the defense of the strait, warning that NATO would face a very bad future. He also threatened to delay the Beijing summit with President Xi Jinping if China does not help unblock the strait. But amidst this chaos, Bitcoin is acting as a pillar of strength, currently hovering near $74,000, supported by robust institutional appetite. To wrap it up, the markets are trapped. Skyrocketing oil is a tax on everyone. FIIs are selling in India, and central banks are paralyzed by inflation. If you are an investor, this is the time to stay rational. Extreme volatility is a reminder of why risk management and diversification are critical. Keep a close eye on the Fed's commentary this Wednesday. That's your update for March 16th, 2026. Hit subscribe, and I will see you in the next video.